Your direction determines your destination. So the whole point of these financials is to show you what direction your business is going in. It may look like you're doing well because you have cash in the bank, or it may seem you're doing well because your production is great. But really, if you look at year-over-year production or production per agent, what direction is your business really going in? And is it going to sustain you long term? So the income statement. The income statement, sometimes we refer to it as a profit and loss. It's basically your revenue or income from all your sources, and then your costs or your expenses. And there are two kinds of costs or expenses. We have fixed and we have variable. So fixed expenses are those overhead expenses that are going to occur regularly, regardless of whether you have any income in the company, whether you have any agents. Think, for example, your building. You probably lease your office. That's a fixed expense. It doesn't mean the payment is the same every month, because it may vary depending on whether maybe you have a triple net lease, so you have more expenses some month. But it's a fixed expense because that overhead will always be there. Your insurance, your E&O, your salary. Now, variable expenses are those that go up and down. They vary according to your sales. Every time you have an agent who makes a sale, you collect compensation and you pay that agent a certain percentage of it. That would be a variable expense, what you pay to the agent. And it varies. It goes up and down depending on the income that comes in. So every time you make a sale, it costs you money to make that sale, and those are your variable expenses. Okay, what else? Gross revenue. That's your revenue from all sources, right? And then your gross income, which we're going to see in a minute. That's after some things are subtracted, like, for example, your returns. And then once your expenses are subtracted, you have your net income, and then you have which is your profit, but then you're going to do a little calculation and see what your profit margin is. Here is a sample income statement. There are multiple streams of revenue coming in. This brokerage is making money from sales transactions, referral fees, property management, agent desk fees, transaction management fees, consulting fees, BPO fees. All these account for their sales. And then you have their cost of sales, which are variable expenses. For example, what you pay to the agents, what you pay out in referral fees, or the portion of it.